We're 2 hours into trading. It is Thursday, May 13th. Hello, traders. Let's start with the pick that I posted a few days ago. Qualcomm took a couple of days off, but this was my last pick. Qualcomm had been selling off after a gap down. Lots of relative weakness throughout the course of the day. The video came out. Stock was at around $132. It finished at about $129. So what had me so bearish on Qualcomm? By the way, I did say day trade Qualcomm from the short side, so I'm not going to take credit for what's happened the last 2 days because you should be in and out of those positions. You can see the upward sloping trend line on Qualcomm had been breached. Also, the major moving averages, 200-day and 50-day. Stock could not get above the 100-day moving average, and that relative weakness that I had shown you told me that this stock was headed lower. It is finding support, horizontal support, right here. The market overall has been very weak, so let's spend a little bit of time on that. You can see how the S&P 500 had been compressing. I've been warning you in here that this was not a time to buy. Everything was telling me that the market was getting ready to roll over. Why? And I did not know that back in here because this is when mega cap tech earnings were just starting to come out. You can see lots of little bodied candles. Those are called dojis. They signify that buyers and sellers are paired off. Equilibrium. That's why the market closes pretty much where it opens. We could not rally on gangbuster earnings releases. And I mean, these companies knocked the cover off the ball, the likes of which we have not seen in a decade. Well, when the market couldn't rally on that news, I knew that it was out of gas. Plus, we had the FOMC statement, dovish as can be. We also had really strong economic numbers. Forget the jobs report. I think that's a farce. That number is going to be revised higher when we get the unemployment report next week. But in any event, you had three major pieces of information hitting the market, and still we could not break out of this compression. So now there's the crack in the dam, and there's the follow through. This is no big surprise. I'm not going to tell you that I'm a stock trading guru. This is very obvious to me because if we look at the chart, and we go back in time, you can see how the market has been in a 3 steps forward, 2 steps backwards process for a very long time. Every time we rally, we get overextended, we get a dip. Rally, overextended, dip. Well, we hadn't seen a dip after an 8% market rally. Fantastic news was priced in, so all that happened was expected. Now, the one thing that has been a fly in the ointment is inflation. And these inflationary pressures, unfortunately, are not due to demand. If they were due to demand, it would signify that global economies are rebounding very, very quickly. It has more to do with supply bottlenecks, supply disruptions, and those can be resolved. So the market doesn't like the fact that there are going to be higher prices that are not demand driven. So we had a oil pipeline that got hacked that's creating higher gasoline prices in the southeast. We've had poor crops in Brazil that's forcing grain prices higher globally. We had lumber companies with very, very low inventory because their forecasts were off. They did not anticipate the type of home building and home improvement that we saw. So lumber prices are up 200%. You've got copper hitting near all-time highs, iron ore. So a lot of this is because of these supply shortages. That's going to work its way through the economy. However, everyone's wondering, did the Fed underestimate just how hot inflation was going to be? And are they going to flinch when we continue to see prices jump higher? Bonds are selling off, so interest rates are starting to move higher, and that's what's keeping pressure on the market. This is not a problem like we saw over the course of the last 6 months. It can be easily resolved. For a while it was, well, we got to get through the election, so we had some choppiness there. Then we had the stimulus bill. Is it going to be? Isn't it going to be? Finally, it gets passed. Then we had the vaccines. When are the vaccines going to get to market? These are all very short-term issues that can be resolved. This inflation thing, it's not going to go away very quickly. Now, you can see how the market has sold off for 3 days in a row. We haven't seen selling pressure like that in a very long time, and it's been pretty unusual. Usually you get one big down day and then a rebound. There you got actually 3 days of weekend weakness and then a very strong rebound. Here we had a little bit more of a prolonged probe for support, but still you can see how the bid has been very, very strong because these declines never really get going. Never really get going, and then we fly higher. I think that we've got some more downside before we find a nice support level here. Let's put up the major moving averages. The 50-day is the only one that we're really watching right now because it is in play. We touched it yesterday. Every time that we've touched the 50-day, that's been a good entry point, and we are seeing buying today as a result. So market feels good today. I think that it's going to stay positive today, but I also think that you could see a little bit of selling pressure this afternoon. Market tends to make a big move and then pause for a day or two and then continue that move. I think this is going to be a day of rest. Friday might even be a day of rest, but come next week, especially if bonds continue to sell off, I think you're going to see additional selling pressure. You're going to see that 50-day moving average tested again. If we break that 50-day moving average, how low might we go? Well, I believe that this breakout right here could be tested, and that is approximately 398. It's just above the 100-day moving average. That should now be a support level. Also, if we take this compression, take the low, take the high, take that range and subtract it from the low, that gets you to 398 also. So I think that's going to be a low point for us. If we get that low, I think there will be a buying opportunity. Right now, I would stay away from tech and I would favor cyclical stocks. In particular, I would favor basic material stocks, energy stocks, iron ore stocks, companies that are involved in agriculture, for instance, John Deere or Caterpillar, that will also benefit from mining and an infrastructure build out. So, longer term, I can't wait to get into some of those names, but I don't feel that we've seen all the selling. So, I'm not quite swing trading yet. I do have some bullish put spread orders out there today in exactly these types of stocks, but I'm going to need help from the market. I'm going to need help from the stock to get filled on it. Until I see that retest of the low, I'm going to continue to day trade. And I actually like day trading from the short side because the moves have been so sustained. Once that move gets underway, it continues. So I'm going to show you a couple of stocks that I like shorting today. Those are going to be my picks of the day. I'm going into my day trading searches in Option Stalker, and I'm going to go to my heavy selling search, and I'm going to go right to the second stock. That is Alibaba. You can see major horizontal support here and a breakdown below that major horizontal support level. Put the 5-minute chart up. Look at that sustained selling during the course of the day. Get the 5-minute chart back up on the SPY. Market higher, higher, higher. What did Alibaba do from the opening? Down, down, down after an earnings announcement. Another short that I like, BILI. You can also see it right here. Look at that steady, steady selling in BILI. Go to the daily chart. Aha, another horizontal support breakdown, well below the major moving averages. Still room to that 200-day moving average. A lot of weakness in China. What is up with that? Isn't China leading the global economic rebound? Isn't China out from the underneath the virus 8 months earlier than the rest of the world? Yes, they are. Well, then, what the heck is going on with their market? How come they're not going gangbusters if there's a global economic rebound? Take a look at FXI. These are the 25 strongest stocks, biggest stocks in the Chinese market. Look at this selling pressure and look at that breakdown below horizontal support. Let's zoom out. Take a look at the 1-year chart. Aha, head and shoulders formation with a breakdown below the neckline. So you have a big tailwind at your back if you're shorting Chinese stocks right now. Plus, you can take a look at how weak they are after posting earnings announcements. your pick of the day is Alibaba to short on a day trading basis. And you can also day trade BILI from the short side today. I like that one as well. So we'll put that one up finally, and then we're going to call it a day. Look at that selling. Market rolling over. So we got a little bit of a bounce here and then immediate selling again. This is just a knee-jerk reaction bounce. It has been successful for many traders to buy the first big drop the next day, and that's exactly what we saw. But eventually, that tactic is going to run its course. Bull markets die very, very hard. I am not bearish here, but I also don't think that this is a perfect market and perfection has been priced in. This inflation thing is not going to go away right away. This is going to take maybe 2 months to resolve, maybe 3. And then I think the Fed and analysts will have a clearer picture of what is actually going on with these supply disruptions. How quickly can we get those supplies back online? To what extent can we expect inflation? And to the extent that there's huge inflation right now, how is that going to impede economic growth? Plus, you've got the virus spreading globally. So 80% of the countries are on the do not travel list by the State Department. That tells you that all is not well and that this is going to take time to resolve. One final note on inflation. If you take a look at how much it costs to do your home improvements now just because of the price of lumber, I have a neighbor who told me that his remodeling project, the lumber alone went from $45,000 to $125,000. He's not going to do it. He's going to postpone it. So if we get this gigantic spike in raw materials, how is that going to impact economic growth? In any event, we're backing off of the high. I believe you've seen the high of the day. I don't think we get anywhere near yesterday's low. In fact, I think it might be a little bit difficult for us to fill in this low. I am looking for that 50-day moving average to be retested sometime, either tomorrow or next week. That's all I've got for you. Thank you so much. Please leave your comments. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.